It's time now for business, and for that I'm joined in the studio by Stephen Carroll. Hi, Stephen.
Hi, Haxi.
We're starting in Lebanon, where the country's financial crisis is worsening.
The World Bank says that Lebanon is in the midst of one of the worst economic and financial crises of the past 150 years. One of the really key parts of that crisis is the collapse in the value of Lebanon's currency, the Lebanese pound. As a result, dollars have become even more important to pay for goods, particularly imports, and the country is running short of dollars as well. In the latest twist, Lebanon's central bank has suspended a special dollar exchange rate that was put in place to try to limit a run on dollar withdrawals from the banks. The system was enforced since March of last year. It had meant many people who had dollars in their Lebanese accounts could make limited withdrawals at a rate of 3,900 Lebanese pounds per dollar. That's much more than the official rate, which is just £1,500, but much less than the rate you'd get on the parallel market, the unofficial market, of around 13,000 per dollar. The absurdity of this system led people to dub it lollars in their accounts. Now, with that bank exchange rate now scrapped by the central bank, people have seen their dollar deposits effectively cut in half in value overnight. That led to queues at ATMs on Wednesday as people were trying to rush to take their money out before this change came into effect.
Now, this currency crisis is also having a number of other effects on people's day-to-day lives.
At a national level, if your country is short of dollars, particularly a country like Lebanon, it means you can't buy imports. And this is playing out now in the country's health system. Hospitals running short of medicines and medical supplies. That's led to cancellations of non-urgent surgeries. The central bank has been, until now, subsidising the imports of essential goods, including medicines. But it's told the government now that it needs to find money to pay the $1.3 billion of already owed money to medical suppliers for imports that have been delivered already. A situation that's getting worse by the day. The head of the country's pharmaceutical importers union saying that they're expecting to run out of many medicines this month. There have been similar shortages of things like fuel. That's meant long electricity blackouts during the day in Lebanon. A crisis that has been brewing for years. It's been made much worse by the pandemic and also political turmoil, wrangling over a new government happening there too. The Lebanese economy has lost 40% of its value since 2018.
OK, well, turning next to the United States, which has threatened new tariffs over taxes on tech companies.
Washington is threatening tariffs on goods from India, Italy, Spain, Turkey, Austria and the UK because of their digital services taxes, which target mainly US companies. But the measures have been suspended for 6 months, pending ongoing talks on the reform of international taxation. The 25% levy would be imposed on $2 billion worth of goods, including cosmetics, clothes and video games. The US has already suspended tariffs on $1.3 billion worth of French imports over the same issue. Finance ministers in the G7 large economies are meeting tomorrow to discuss plans for a global minimum tax on big companies.
Stephen, what's happening on the markets today?
We've got gains across most of the Asian markets in trading today. Just Hong Kong dipping into the red today in trading. Investors digesting news from Japan that the government is considering extra help for the economy as the country sees another wave of coronavirus infections. The Kospi and Seoul, they're up by 0.9%.
Well, next, Stephen, to details of a new report looking at the impact COVID-19 has had on jobs around the world.
The International Labour Organization says the pandemic has pushed more than 100 million more workers into poverty. That's as working hours have been reduced for many people. The ILO says the jobs market won't recover until 2023. Jean-Emile Jamin reports.
While the global battle against the pandemic shows signs of improvement, the resulting economic shortfall is expected to be felt for years to come, especially for job seekers. That's according to the International Labour Organization's World Employment Report, which revealed that 75 million jobs will have been lost this year as a result of the pandemic, while 100 million more workers have been pushed into poverty.
5 years of progress in reducing working poverty have been wiped out by this crisis. There is a very real risk that we will end up with inequalities that are worse than they were before the crisis.
At least 220 million people are expected to remain unemployed globally this year, and while that number is expected to improve to 205 million next year, it will still be significantly more than in 2019. But that still doesn't tell the full story. Even for those who kept their jobs, working hours fell by 8.8% over the last year, equating to an estimated 144 million full-time jobs. Any potential recovery, meanwhile, may well be offset by unequal access to COVID-19 vaccines.
We expect the employment situation will be worse in low-income countries. High-income countries will close the gaps the fastest thanks to their better access to vaccines and their strong fiscal policy support.
The crisis has also disproportionately hit women, who have fallen out of the labour market at a greater rate than men, while youth employment levels have fallen by nearly double those of the elderly. Just as the disease appears to have devastating, drawn-out health consequences, the ILO predicts the global labour market could suffer the same fate, with a full recovery unlikely even by 2023.
Yet more organisations in the United States are reporting that they're victims of cyber attacks. New York's subway operator announced on Wednesday it had been hacked back in April. 3 of its 18 computer systems were accessed, although services weren't disrupted by the attack, while ferry services in Massachusetts have been disrupted by a ransomware attack yesterday. This after the supplies of meat were upended this week by an attack on the world's biggest meat processing company, JBS. It says it'll be back to working at full capacity today.
Well, finally, from you, more incentives from companies for people to get vaccinated in the United States.
The brewer of Budweiser has pledged free beer for Americans if the US can meet the target of 70% of adults getting at least one dose of a COVID-19 vaccine by July 4th. If that happens, Anheuser-Busch says everyone over the legal drinking age of 21 will get a free beer, seltzer or non-alcoholic drink by uploading a photo of themselves at their favourite bar. It's just the latest corporate partnership with the White House to try to boost vaccination rates, which have been slowing down. Ride-hailing firms Uber and Lyft have been offering free trips to people going to and from their jab appointments.
I can see the appeal.
Indeed.
Stephen Carroll with a look through the day's top business stories. Thank you very much.